Near Protocol is one of the OG tokens, and it's the definition of the up and down roller coaster in crypto land. Let's have a look at what's causing those pumps and dumps, and let's try to find out using on-chain data if we are up for another pump or if we're rather dumping again. So this is Near in US dollars on a linear scale, and here's the same on a logarithmic scale. We've seen rallies from bottom to top of 3,700%, but we've also seen bear markets of 95%. Of course, some of this is due to the overall crypto market. So let's look at relative valuations. Let's look at the idiosyncratic movements. What we've got over here is the Near price relative to Bitcoin. And since October of 2020, Near underperformed Bitcoin by 35%. And it's very interesting how this bottomed in October of this year at very similar levels to where it bottomed in December of 2020. This bottom is not that obvious on the US dollar denominated chart. Here we've got Near relative to Ethereum. Also long-term a slight underperformance, 44%. And even though this looks problematic because buying Near is obviously more risky than buying Bitcoin and Ethereum, and we did not get compensated for that risk, we didn't see outperformance, even though that's not so nice, I think that this underperformance might come to a stop. Because the fundamental reason, I believe, for the worst performance and for those dumps that we have seen several times in the price, I believe the reason is in token inflation. The number of Near tokens went from 208 million to currently 1.1 billion. So it more than 5x'd. The circulating supply grew massively. And when the token only underperforms by 30 to 40%, when the supply is more than 5xing, that actually shows that there is quite some growing demand. The question is, of course, will that demand continue to grow as the token inflation goes down? Now, Near's main usage is decentralized finance. It's DeFi. And DeFi had a massive run up in 2021. This is the DeFi market as a whole. And then it imploded in 2022. So that was due to FTX and due to Terra Luna. We have then seen again a resurgence beginning in October of last year. And now things are weakening. Now, isn't that chart eerily similar to the Near price denominated in Bitcoin? That also bottomed in October of last year. And it also peaked in April, May of this year. I don't think that's coincidence. I believe there is a strong link between the money that's flowing into crypto through the fiat system and crypto prices and DeFi adoption. What we've got over here is the stablecoin market cap on Ethereum, because most stablecoins are only one-to-one redeemable on Ethereum. They do get bridged over to other chains, but if you want to redeem your USDC, you have to do this from the Ethereum chain. And this continued to contract up until October of last year. Then it rose again, and then the rise stopped in April of this year. Now we're just going sideways. And if you're not expanding in crypto, then people rather go risk off, which makes sense, right? You only want to take on a lot of risk if you get the return. And so this is DeFi as a whole, and this is the total value locked on the Near chain. Those are very similar charts. Again, bottoming out and peaking at very similar times. And so if the momentum currently isn't that great, if no additional money is flowing into crypto, is Near at least a good value play? Is it, relatively speaking, cheap? So what's the market cap relative to the total value locked? And let's look at a comparison. So currently we've got $200 million worth on Near chain. The fully diluted market cap is at 4.8 billion. And so when we look at that relationship, market cap relative to total value locked, then the Near chain is over here at 22. 22, unfortunately, is rather on the higher side. There is Cardano and Ton, which is more expensive. So Ton is at 35. Cardano is at 63. But if you just compare this to the majority of other chains, of course, Bitcoin doesn't count because Bitcoin isn't really used that much for DeFi. There's only the ordinals over here. If we just look at that relationship for most chains, 22 is rather expensive. The market is pricing in that Near's total value locked can outgrow the total value locked of other chains. Will that happen? Your guess is as good as mine. I'm personally rather cautious, right? I want to see crypto as a whole expanding to get into risk on projects again. The token inflation isn't terrible anymore. We are probably not going to see a crash that's that's comparable to prior crashes, but I'm not sure how much potential upside there is. Is NIR really able to attract that much capital to outgrow the rest of crypto in a market that's stagnating? That's the big question. I'm trying to be as objective as possible on this channel. I try to not bash cryptos. I also don't try to hype them. I simply just share the data. If you appreciate this, feel free to give this video a like. Feel free to also subscribe. I publish videos regularly on this channel. If you've got Telegram, then you're more than welcome to join us. The link is down below. Looking very much forward to chatting with you.